All right, before this video starts, I wanted to show you guys some new updates inside of the EzAlgo Pro Discord. We've just added trade signals, right? Forex signals, which have been absolutely crushing. You can see we've hit, over 1,000 pips on one trade, all of them hitting profit, right? Stock signals are going crazy, 117% this morning with our option signals, as well as the market analysis, which we've been crushing. We took a short on ETH, so the whole Discord has been printing. And we're also releasing our Easy SMC indicator very, very shortly. So if you guys want access to that indicator, I'm gonna give you guys a special promo here on YouTube. Use the code SMC30 during checkout, first link in the description below for 30% off your first month. All right, guys, so today we're gonna be going over dollar cost averaging and why I believe this is the best route to take if you are just starting out when trading. So this is going to be an extremely beginner-friendly trading strategy. There are not that many moving pieces. You'll be able to get the hang of this very, very quickly. And the gains are there, right? This is an overall profitable strategy when you follow the rules and when you dollar cost average. Now, if you don't know what dollar cost averaging is, essentially it's when you're layering multiple bids in one position. So for example, if I were to enter on this EzAlgo buy signal, right at the support level, bullish divergence, our confluences are met, I would have one entry on that buy signal, place my stop loss below the swing low, that is my invalidation level, and then a second entry somewhere around here, and maybe a third entry at the bottom of this wick, right? And then if price closes below this level, then our trade thesis is invalidated. So you have multiple entries. Now this is tremendously helpful because a lot of the times, now this isn't the best example, but price won't always go up from your first entry. So in this case, it did, right? We saw a strong move up from that initial entry, but oftentimes it might come down a little bit before it ends up going in the direction that you thought so in the first place, right? So when you're dollar cost averaging, you can get a better average entry with bids going down. And also, if you were to get stopped out and price hits your stop loss, your average entry is somewhere here in the middle. So your loss is going to be smaller than if you'd entered just one position. But if you have multiple entries going down to that stop loss, then your loss will be a lot smaller. So it reduces risk. Now, on the other end of that, if price does pump from your first entry, you won't make as much money, but that's okay because if you're just starting out, especially in this market condition, your number one goal should be survival. You shouldn't even be focused on making the most amount of money as possible. Instead, you should be focused on small profits over time, surviving the markets, not blowing your account. And you'll do that by using proper risk management and using the dollar cost average entry model. Now, I recommend anywhere from 2 to 5% of your overall portfolio risk per trade. Now, that is with these bids included. So let's say you're entering with $1,000, right? That is 5% of your total portfolio. You have $20,000 in your portfolio. You're gonna be trading with 5% of that. So you're risking $1,000 per trade. And let's say that you have 3 entries, right? You have 3 entries using dollar cost average. Each entry you're going to enter with $333. So your first entry, $333, second $333, and the last one, $333. If you guys want a more detailed description of dollar cost averaging, you can go to our absolutely free Gitbook at ezalgo.co/docs or join the Discord. Go to the education channel and we have a full breakdown of DCA inside of the Discord as well. But that is kind of an introduction to what dollar cost averaging is. I talk about this a lot, and this is very useful on a higher time frame. So when you're entering scalp trades, you probably don't want to use this. This is for 12-hour and up time frame. It works best, right? Daily time frame works incredibly well. You could do it on a lower time frame, such as a 1 to 4 hour. In this example, I'm going to be showing you guys this on Solana on the 12-hour time frame. And now in this video, I'm going to be incorporating EzAlgo into this strategy. I think this is the easiest route to go if you're just starting out, but you can still apply what's told in this video, even if you don't have the indicator. All right, so let's talk about the confluences that I like to see when using the dollar cost average method. All right, number one, I want to make sure price is at a key level. If price is kind of in the middle of a range, it's not at a key support or resistance level, I probably don't want to take that trade. Now, this is the number one rule for any trading strategy. You always want to make sure price is at a key level. Higher time frame support and resistance levels are better. So I'll put that in the parentheses, higher time frame SR levels. Now, I'm a support and resistance trader. I know a lot of you guys might trade smart money concepts, order blocks. That's totally fine because if you actually draw order blocks, they most of the time will overlap support and resistance zone. So it's all retail trading methods. Don't let people confuse you, right? If you're scalping on a 1 minute to 5 minute, it's a different story, but I like to use higher time frame support and resistance levels. This is what I've found works best for me. So that's the first confluence. The second confluence, I like to see momentum. I want to see what the momentum is doing. Now, I like to use the EzAlgo oscillator, right? This does a great job of showing me when price is in these overbought and oversold zones, as well as having these real-time non-repaint divergences. Now, if you don't have Easy Oscillator, there are a few alternatives. Fu Manchu Cipher B is great as well. The only thing I don't like about Fu Manchu Cipher B is that their divergences are delayed, and I think there's way too much stuff going on, right? I want to see momentum and the volume. That's it. So I'll actually put that next to momentum and volume. If the momentum is in the oversold zone, right, we have some of these buy dots on the Easy Oscillator, we're making bullish divergences, right? Price is forming new lows as momentum is increasing to the upside, and we're at a key level. That is confluence for me. I will enter a long position just off of those two alone. And then look at the volume, right? The volume is increasing to the upside. And we can actually make this a little bit bigger inside the settings, right? The volume is increasing to the upside. You can clearly see as price is making that new low, the volume is increasing to the upside. So I like to see that volume increasing as well. So that's a second confluence I like to see. You can enter solely off these two alone if on a higher time frame. But for the final piece of confirmation, I want to see an easy algo buy sell signal using the default sensitivity. Right, default sensitivity. You can play around with the sensitivity and find what works best for you. I prefer to use a default, which is 1.7. Now, these signals are meant for the Heikin Ashi candles. If you're trading on a 12-hour time frame, you can absolutely use Heikin Ashi candles. I don't care what anyone says, right? And I'll go and I'll backtest this a little for you guys as well. Even though it's showing you an average price, the real price is not far off from what the Heikin Ashi candle is showing you. So those would be the confluences in this strategy. Now, of course, you can incorporate your own trading methods as well, right? Maybe a failure in capture of a key level, right? We had lost this level previously, right? Broken below and then reclaimed with that easy algo buy signal. Maybe that's another criteria for entry. Maybe you use fair value gaps, maybe use order blocks. I don't know exactly what you use in your trading strategy. There are many, many things to incorporate, but I'm going to keep it as simple as possible. And this is an absolute beginner way to get into trading, get the hang of entering and exiting. And by the way, you can set alerts for when price is at these key levels on Easy Algo, as well as the buy and sell signals. So you don't have to be constantly sitting at the chart waiting for that signal to confirm. You can simply set an alert. Once you get that alert, hop on TradingView, see if it matches your confluences, and then enter. So very briefly, I'm going to do some simple back testing here to show you guys how I would enter. Now, I'm not even going to use all of the confluences. I'm just going to be showing you guys this with the easy algo buy sell signals, and the entry is going to be on the real price. So when you see a Heikin Ashi candle like this, right, where you have this long wick down, the average entry is not going to be when the Heikin Ashi candle closes, probably closed somewhere around here on the Heikin Ashi candles. That's why I say these signals are meant for the Heikin Ashi candles. So let's say it closed right around here. We're going to give us the benefit of the doubt. So throughout the past 14 buy and sell signals, 12 of those were winning trades. Now, you might be asking, well, how are these winning trades? How do you know when to take profit? Because some of these gains are so small. The risk to reward when you're using this trading method is going to be extremely small. And the reason I say that is because when you're dollar cost averaging, you want to be taking profits pretty quickly. For example, on this sell signal that we took right around here, we had probably gotten 1 or 2 dollar cost average entries as price came back up. So as soon as price returns to our break even, or maybe our TP1, we want to take a majority of the profits and move our stop loss to break even. So you do want to have multiple take profits when you're dollar cost averaging and take profits pretty quickly. Now, for example, if I were to enter on this easy algo buy signal, I'd probably have my first take profit right around here, which is only, a 4% move, but 4% on 5-10x leverage is a lot, right? That's pretty good. So you take your first take profit, maybe second take profit around here, then move your stop loss to break even to lock in that trade. And you can see if you were just following the buy and sell signals, which I would not recommend, right? No other rules involved. If you're dollar cost averaging and you're taking profits quickly, right? Maybe your TP1 is somewhere around here, TP2 somewhere around here. You can have up to 10 TPs, by the way. This is what we do inside of the VIP. You can have an extremely high win rate and pretty low risk, because even if you do get stopped out, right? Let's say, for example, we took the sell signal, which, by the way, this does not follow any of my rules. This would not be a sell signal that I would take. We're clearly shifting market structure to the upside, seeing higher lows still. You immediately would have gotten stopped out and then entered a long position on the closure of that buy signal, which I actually think it was somewhere around here. So your gains will make up your losses. Keep in mind, you do want to have multiple entries dollar cost averaging and taking profits rather quickly. So some of these would probably only hit TP1 or 2, while others, right, this one right here might have hit 1, 2, 3, 4, 5, 6, 7 TPs, right? And that's why this strategy is so powerful. So this is just an introduction to dollar cost averaging. Obviously, I would not recommend strictly following these buy and sell signals. I'm just doing this to show you guys that when you have good risk management and you have a strategy in place, you can be overall profitable with something as simple as this. Well, that's it for me in this video. Hope you guys enjoyed. If you did, please be sure to leave a like, subscribe to the channel for more trading content. SMC is going to be out soon. I'll see you guys next video.